Welcome to 7 Investing Now, a show that teaches you how to take a long-term view on investing by better understanding what's happening in the market now.
Good afternoon and welcome to 7 Investing Now. We're doing something a little different today. My name, of course, is Daniel Brooks Klein. I am the host of the program. But instead of having some 7 investing advisors on, it's near the first of the month. We are all getting our reports ready, all the things we do for our members. Instead, we are going to have the founders of a company called BettorEdge. What do they do? We will talk about that momentarily. So I am going to introduce James Seils and Greg Kajewsk. Guys, welcome to the program. Thank you for doing this.
Thanks, Dan. Appreciate you taking time out of your busy day. I always love the first of the month. You guys kind of make it like Christmas as those recommendations. Go check them out. So
I am always happy to have someone on who knows who we are. Like,
exactly.
We have a huge, a devoted audience, people who are really excited about us, but I am not naive enough to think that we have quite hit those like CNBC levels yet where, look, I might walk down the street and get recognized, but it's not happening on a daily basis. But let's talk a little bit about BettorEdge. We're going to talk about sports gambling today. And this has been a huge topic on the show. Everyone knows I like to gamble, but I'm a bit skeptical of a lot of the publicly traded companies in this space. So before we get into that, why don't we set the table and talk a little bit, what is BettorEdge and why did you start it?
Yeah, I can take that. So when you look at sports betting as an industry, you think of, the MGM, the big sports books, right? So we are actually sort of a sub-industry of that. And if you look back, 6-7 years ago, daily fantasy started to come along where DraftKings, FanDuel, and they created this industry called daily fantasy sports. We are calling it a social betting exchange or social betting marketplace. And so really the way we are different is in your traditional sports betting, you go to your book, you pay them $10, they take it, they tell you what the price is. So they tell you the Vikings are even money today. They hold the risk, they may offload risk, they do all of that management, have all of that overhead, and then they eventually pay you back if you win minus the fee that they take. We operate a little differently. We take that book portion out of that process. And if you, Dan, like the Vikings on Sunday, someone else in the world likes the Packers, just like a stock market. If you want to buy the Vikings, someone else wants to buy the other side or sell the Vikings. You place your orders out there, it exchanges just like a stock market, and then you guys get your bet positions, you can sell them, you can buy more, just like you would with the stock. And we do all of that while taking all of the fees out. So we do not charge what's known in the industry as a vig. And the reason we don't is because we don't hold any risk. We don't manage pricing. We don't tell you what the prices are. We don't have any of that overhead. So we don't charge any vig. We don't charge any commissions on trades, and we operate just in the exchanging of orders amongst people.
So basically, you're creating a platform that's the equivalent of like me calling up my buddy. By the way, nobody's taking the Vikings. That's not good. But the equivalent of me calling up my buddy and saying, "Hey, I think the Astros are going to beat the Braves. I'll bet $500 versus your." I don't know what the line is in that. But if you give me $500 if I win, I'll give you $400 if you win because your team is favored, and we're sort of negotiating all of that. So is that fully legal? Is what you're doing legal on a national basis because you're not actually operating as a traditional book?
Yep, definitely. And I think one of the things you just described was that interaction between you and your friend is a very social experience. So when you think about social betting marketplace, the category we're creating, it is new, innovative, where we're just connecting users. We're not actually engaged in the bet. Therefore, we spent about 2 years really focusing on the product, getting that up, and 2 years on legal positioning, saying, hey, here's how our product works. Here's the laws that are relevant, talking to different states and making sure they understand our business model so that we can operate accordingly.
So and it's really, so I was just saying, it's really based on our revenue model as well. I mean, we don't make any money on any of the betting amongst people, right? We make money in different ways, just like a social media platform. We sell ads. We do that on the ancillary from the social side of our platform and not on the actual marketplace.
So your platform is dependent, of course, on there being an audience. So I probably could get a bet on that Packers-Vikings game, but maybe not a bet on minor league hockey in Edmonton or whatever it might be. So obviously you need to get, this is true of daily fantasy as well. You need to get to a critical mass, but let's seg a little bit into talking about the broader gambling market. Because you mentioned daily fantasy, you mentioned MGM. These are all companies dealing with like really ridiculous level of legality and trying to figure out, like, if you've ever heard like Bill Simmons do like his his little tag at the beginning of his show where he has to list out like the 17 states you can gamble and then give you all the phone numbers you can call. Like, the rules here are really tricky and, in my opinion, a little silly. But how do you see the state of sports betting in the US right now? Like, the way I look at it, and I might be wrong, is you've got these two giants in Caesars and MGM that have this like massive loyalty program. And I know, like, if I have a choice to bet and I'm going to get tier points at Caesars, I'm going to bet at Caesars. I don't care what they do at DraftKings. And that's why I've been very skeptical of anyone. But I'm going to stop talking. I want to hear what you guys think of the marketplace.
Yeah, definitely. I think it's interesting how that, history has come to be. So, before the online kind of world, you'd go to an actual sports book, you'd have that interaction. It would be really fun as part of it. And then, as they moved that to online, as COVID occurred, it accelerated the opportunity for people to have that online platform. And I think a lot of those large companies have just lifted that, transactional type experience to an online. And whether you sign in at Caesars, you sign in at a different place, you're placing that transaction as part of it. And we took a step back and said, let's think about this entire experience. What can an online opportunity look like? And it comes down to you're collecting information. If you're, when I look at it very similar to the financial markets, for me to start making a position on a stock, I tune into 7 Investing, I go read stuff on Twitter, I go do all these things. And our platform allows for you to get that information about sports betting so that you can therefore place the transaction and you have that kind of end-to-end experience. And we'll give you data analytics as well to say, here's how you're doing as part of that. And I think the overall industry and kind of state of sports betting is, what does the consumer want at the end of the day? And are they going to keep going to those loyalty programs because they get room upgrades, things like that? Or do they want to look at better products to say, hey, I'm actually winning more money, I'm getting a better price, all those types of things as well. So it'll be interesting to see how that plays out. But obviously there's to your point, there's a lot of money being poured into the space kind of around user acquisition and different things like that.
Yeah, and from the loyalty standpoint, I mean, one of our biggest challenges is we need to lead with an education campaign. At the end of the day, you're getting those loyalty points because they're making money off of you. And they're doing that because they're charging enormous fees on bets. And you look at even like some of the newer innovative books that are coming out and pushing macro influencer parlays, where they're even reporting 25% hold on those bets in their, financial statements, saying that we are pushing these out, people are buying them, and we're taking 25% fee from them. And so bringing that education to people and saying, you need to actually win 53% of the time to make any money on these old books. On a platform like ours, you win 50.01% of the time you make money because we don't take any fees in the process. And so, like Greg said, I think, once people realize that it's aligned with their, thought process, and just like when you look at the financial services industry and what Robinhood did and taking away commissions on online trades, I think the industry is going to eventually need to go that way. And these big books have very large overhead. It's going to be very hard for them to shift their revenue model as fast as what I think consumers will shift their behaviors.
That's an interesting point, because so it's also interesting that Robinhood gets credit for that when they were like the 15th platform to do that, and they're by far the worst of all the platforms when it comes to. I still can't. I tried to set up an account, cannot link my bank account to it. Just simply doesn't work. But in the sports betting world, that's interesting, because I don't know that the average my level of gambler, and I'm much more of a blackjack player than I am a sports bettor. But if I'm in Vegas, I'm absolutely putting $100 in the Patriots or whatever team I happen to be following. I don't give a ton of thought to what that take is. Do you think like some of the disruptors, whether it be you guys, who I think are really operating in a different space, than say a DraftKings or a FanDuel or any of these other sort of disruptors, do you think part of that is just going to be you can offset the traditional by just taking less? Like, is that that's worked with stocks, but I think the stock market investors may be a little more sophisticated than the guy who's putting $50 on, the Panthers to win, or dear God, the person who makes a bet in favor of the Jets.
Yeah, I think that's where I said it's a challenge. We need to lead with an education campaign and show people that they are losing this money and that they are getting taken these fees, because it's brilliantly done in the sports betting space, right? Like, talk about a hidden fee where you literally have no idea unless you understand the low detail level of numbers around American odds to understand how you're getting charged this fee. And so in our platform, we definitely show you what VIG you are being charged at other books. And then we actually allow our users to donate that saved fee to a charity that we partner with as well. So if you're on our platform, you definitely know that there's a VIG out there in other places. And I think as new companies in this space come on and do similar things, the education is just going to start having a groundswell, and people are going to notice that, hey, my $10 bet's going to win 10 here, or it's going to win $9 here. I'll take the extra dollar as long as the friction to sign up is low.
And to double click on that, we did a lot of surveys with early users and a lot of different demographics, and we said, hey, what are your thoughts on this, et cetera? And multiple people came back right away and said, if I'm not getting charged a fee here, why would I go back and get charged a fee elsewhere? I think consumers are used to that trend. They're used to lower fees, and that's been set in a lot of industries, Venmo, the financial industry, all that type of stuff. So we expect that to continue to play out as well here.
So do we think, so I liken sports betting often to cannabis, where there was just a lot of investment money where people went, oh my God, cannabis is going to be legal. Everyone threw money at it. And almost all of those companies are bad investments. There's a very small percentage of cannabis companies that have been good investments. If you're a 7 Investing member, I have recommended 2. So go look. And one of them hasn't done so well, but it's still actually my most steady investment. I put money into it every month. But do you think sports betting is like that? Because I sort of felt like when DraftKings went public, nobody read the S1. No, it wasn't an S1. It was a SPAC. Nobody read the documents. Nobody looks at their quarterly earnings call. They're just like really focused on this idea of opportunity. If you're telling me that fees are going to come down, that makes it, again, a lot more like cannabis, where it's really easy to grow and the margins just aren't there. So it really is doing something different that makes you money. Is this actually an industry that's maybe not what people think it's going to be in terms of like incredibly lucrative across, just because so many people gamble? They always look at that number, like illegal gambling in the US is 30 billion or whatever it is. But it's, again, there's a lot of illegal pot too, and those companies haven't made a lot of money.
Yeah, it's an interesting parallel. I mean, you mentioned 30 billion. If you look at the, some of the forecasts that if all 50 states were legal, you're looking at a total handle of about 280 billion. So, I mean, I think
Oh, wow. I thought I was high.
I'm talking about handle. So we look at very much how much money is being handled by individuals, because we can, that obviously drives volume on our platform. So you can look at a lot of different, numbers with that to see. And I think that's why you're seeing such a large marketing push right now. You see sign-up bonuses for X, Y with, 3, 5, 20 times rollover type stuff. And people are trying to obtain users. What I find really interesting about that is typical bettors have multiple accounts in different places to have, to be able to get the best price, to be able to, get that sign-up bonus, all those types of things. So it'll be interesting to see that when the dust settles and the marketing funds kind of, dry up, where are people going to gravitate towards? And I think our focus is huge on let the best product win at the end of the day. Let that experience, let that best price. You're going to keep coming back to the brands that you believe in, that are kind of doing the right kind of charity type things and that type of stuff. So it's been fun to kind of watch, and I think it'll be cool to see what happens in the next 3 to 5 years as well.
Yeah, and I think for us, we're very lean. We're going to be lean and be strategic about how we use money and how we gain a market share. I think where you see some other companies that are like cannabis, you're just throwing a ton of money at it, you're throwing marketing without a ton of strategy behind it. And so that's been our strategy is as we grow in this space. And so, if you're looking at what's good money, I think that's a good way to look at it. Make sure that we're getting the right market fit and then we're scaling. And from a product standpoint, we're ready to scale. We're all set on that standpoint. It's really now like, let's find the fit, let's find the right marketing ways. Let's do that at a low CAC. Because I mean, like Greg said, some of these big companies, they're doing, $1,000 risk-free bet, and like, what is their CAC going up to? It's kind of insane. And so, we're taking a little bit of a different strategy from that standpoint. And so that's where I think, the winners will come. But yeah, you're right. There's a lot of money going at this space right now.
Is some of that just that public companies have to grow at all costs? We've seen this in streaming. Now, if you're Apple, if you're Disney, you can throw an endless amount of money. You don't have an immediate pressure to make money. But if you're anybody else, you're throwing away hundreds of millions of dollars on, and even throwing Apple in. Nobody watches the morning show. Like maybe some people are watching Ted Lasso now, but even that I think is probably very overhyped. That's kind of what's happening in gambling, right? Like Caesars is throwing money at like Trey Wingo and Kenny Mayne and who knows, probably you'll get Adam Schefter over there at some point. And then you have all those big bonuses. Is this just a gold rush? A little bit like, remember all the poker advertising? Like, I don't know, what was that, like a decade ago? Is this just destined to burn out?
We've debated that a lot. And I think, the reality is so I had the chance to live in London for a couple of years and see the betting landscape there. And I think the way that they've allowed for it to be kind of ingrained into their sports and ingrained into the community in a healthy way, which I think is really cool with our platform as well, is we want every user on our platform to win. It can't actually occur, but we don't have a financial risk against them like other, items in the industry. So I think when you look at the community aspect, you look at kind of those, I foresee when you go to a game, you're going to be able to, place a bet on your phone. You can look at that first quarter opportunity, and then obviously you can take your winnings and you can, do different interactions of the game that I think will be very innovative and very cool in the future. So there'll be a little bit of burn, but I think it'll be here to stay to kind of change the way that people game and experience the environment.
Let me ask a follow-up question, because the gaming experience in England is incredibly different. You can bet basically everywhere, and you can bet on really silly things, albeit at pretty small amounts. Like, what colored laces will so-and-so wear? Do you think that's where we're going in the US, that at least in a lot of states, it's like 7-Elevens have betting kiosks, or it's ubiquitous on our phone? Because that feels dangerous to me as someone who likes to gamble.
Yeah, I mean, I think so, right? Like if you have success in one spot, you're gonna, give an inch, take a mile. So we will probably get to those points. I think, we have at least the ability to look and see what happened over there and learn from it and do it probably better, especially with responsible gaming and social responsibility behind it. Like, just to give you an example, one of our biggest core values is around social responsibility and responsible gaming. So even in our platform, we set limits. You can set your own limits. You can do all of those things that help you keep yourself in check. And I think as the industry grows, that side of it will grow as well. And I think, it will be pretty pervasive in those spaces, but hopefully we do it in a responsible way.
So one of the dark secrets is that Vegas doesn't make a lot of money in gambling on someone like me. Somebody who goes and plays a few $100 a night of blackjack, maybe throws some money in a slot machine, places a sports bettor too. They make money from me when I go to the steakhouse, or when I think I need a sweatshirt and I buy an $80 sweatshirt at the Cosmopolitan. I'm not saying I did that, but I absolutely did that. But is the future of companies like yours and maybe the sort of commoditized world of betting everywhere, is it the $5 and $10 bet? Is it just the person who just like is really treating it as fun, as opposed to the guy like me who actually thinks he knows something, which history would say I don't, but I still think I know something?
If you take our revenue model, right, it's not about how much you bet. It's about how often you come back. And it's very similar to Vegas, right? Like, you can go there, bet $5, but as long as you're coming back every year, year after year, you're at the restaurants, you're doing that. It's the same as us, right? We're selling advertising on our platform. We're partnering with influencers that want eyes, want, clicks and all of that. And so, if our revenue model is the one that continues to take off, then yeah, I think you're right. It doesn't really matter if you're a pro bettor versus a, casual bettor. As long as you're coming back day after day, then, we're making money in the industry.
And with that as well, the fact that you don't have the fees, you're now able to win it 50% of the time. It is essentially a coin flip that you're able to keep coming back more frequently. And you're not, if you place 20 bets, you're down 5%, maybe a whole unit, a whole bet. But with our platform, you're obviously still at 50% if you can pick that. So those casual bettors, they keep coming back more and be able to, have a better experience with it.
How do you protect your audience from, let's call them sharks? We saw this in the daily fantasy space where I go in, I'm having fun, I put my $10 in, and I'm actually playing against a guy with like an algorithm and a supercomputer. Like how do you stop me from like making my $50 bet and coming up against like a super villain who's gamed the system?
You want that one, or you want to take it?
Sure. So the daily fantasy stuff is more right for that type of model, right? Because when you look at, you're drafting whatever 10 players, and there's a lot more going into the one individual competition. From our end, number one, we only allow, so we do KYC procedures. So you can't sign up with a bot. You can't sign up with two different people. So at the end of the day, the prices are very transparent. And so if you look at MGM's got minus, 110 and ours is minus 100. I mean, you may be competing against a Todd Furman or Pro Better, but the price is competitive. So it's not like you're doing some of this dark algorithmic logic behind the scenes to create a lineup. You're buying the Vikings at minus 110, you're picking them to win. So it's less right for that. We do have controls in place around market activity and whether you're doing things like the house or something to stop people from doing that. And that also helps with that as well.
And the Sharp really drives market activity too. So if you think about a stock market, if I'm buying from a large investment firm and my stock comes from there, that's okay. I mean, we have different opinions on what's going to happen, but it's very healthy to make an efficient market with that.
We've also learned in the past couple of years that the stock market can be manipulated. I mean, I'm not going to debate the merits of AMC or GameStop, but there was some clear manipulations going on with those stock prices, which obviously can happen in the sort of shadier corners of the sports betting world. It's not happening when you walk up to Caesars and put your $100 down. Last question for each of you, and Greg, you can go first. What are people getting wrong about sports betting as an opportunity in the US?
Yes. So I think there's really a couple different, sides to this. And I think I'll take the first one. I think James probably has a different spin on it. But when you look at the companies that are, out there from a sports betting standpoint, I touched on it a little bit earlier, is really sit back and think about the user experience and make sure that as you look at online experiences, re-envision what that can look like and allow for opportunities for users to have that social environment to allow for you to follow. So if I'm, following 7 investing picks or recommendations, I have that social interaction where I can see in your guys' emails when I log in what that is. Our platform allows for you to do that all within one place. So if I'm following Dan, who's really good at sports betting, I can say, hey, I like Dan. I want to back what he's doing. I want to pay what he's doing and create that, completely different environment. I think that very few companies have looked at that experience yet and said, how can we reinvent that? How can we do that? And I think it'll be cool to see as we continue to grow, how people take that and use that for the next level.
Yeah, and I hit it on it before. I think, it's an industry that's made money in an individual way, and it's continuing to double down and bet on that way of making money. And that's through, risk management, positions, and that VIG, that hold, right? And so as you're looking at where the industry is going and where all this money is pouring out, it's doubling down on that. Where I think it should be going is more on how do we benefit the consumer with education, give them money back, let them win at 50.01% of the time versus 54%, and then make money in different ways, innovate in revenue around how, financial services companies are, how retail companies are, how social media companies are. And we're not seeing that as much in the sports betting space. And I think we will, but money's still pouring into those giant sign-up bonuses and giant marketing budgets and getting the 25% hold on these parlays. So that's where I think, where our platform will help maybe steer the ship to a better platform for consumers.
Let me ask a quick follow-up here, James. Are the Caesars and MGMs and really everybody in the current space, and I guess this includes the daily fantasy guys, because they are using that model, are they being disrupted and they don't know it? Like, is this a case of like the cable industry, which did not take streaming seriously, and acted like a monopoly for a really long time. Like, I see Caesars as a customer taking perks away. That doesn't do a great thing for me when it comes to like not looking for other platforms. Like, there's a point where, oh wait, you're not reopening the lounges in Vegas? Like, well, maybe I don't care about earning my loyalty status. Like, is there just like sort of a blindness? Because we've seen that in a lot of industries.
I think it's possible. I think it'd be naive for me to say that they're not seeing this. But I do think it's possible, right? You look at like how much, operating costs and all of the things that they're blowing up from marketing and everything. It's going to be very hard for them to all of a sudden turn off a major revenue driver and compete with someone who's doing it in a different way. And as long as the education comes and consumers realize that. So I think maybe it's not blindness, maybe a blind spot, but I do think it will cause them to shift, and it likely will be pretty expensive.
Greg and James, thank you. I really hope my Caesars host is not watching this. I will be in Vegas November 7th through 11th, and my room is comped, and I'm pretty sure I have a suite. So if you're watching this, no, I'm kidding a little bit. I think we're at a big time of disruption. I'm looking forward to seeing it. I'm looking forward to see how you guys do, because it's a really interesting idea. If you would like to get in touch with us, it is very easy to do. That is info@7investing.com. If you want to follow us on social media, that is @7. That is the number 7. Investing. We're on social media, on Twitter quite a bit. We are always happy to talk to you. And of course, if you'd like to become a member, it is 7investing.com/subscribe. Thank you to JT Street behind the scenes. Thank you to Sam Bailey, who set this up. Thank you, Greg. Thank you, James. We will be back on Friday.
Thank you, Dan.